All right, Brian, thanks for joining me. We're hitting the record button so I can ask you all of the questions I'm curious about, and everything's recorded. So, welcome to the show.
Oh, thank you so much for having me.
So, I feel like we're going to talk about nothing but angel investing on this show, which is frankly one of my favorite subjects right now. So, I'm really happy to have you on here. I've got your some bio notes up that was sent from Elizabeth Yin from Hustle Fund. You work together in
hmm
Hustle, but you've done a lot more things. So, listen, I'd love to just dive into your background first.
Okay.
Who are you? Where were you born?
All
and
right, let's start with that.
let's go all the way to
Let's
the
go
back.
all the way back.
Yeah.
I'm Bay Area born and raised. So I've been around kind of the tech world my whole life. So I went to USC for undergrad, got my master's from USC, and then immediately after graduating, started my first company. So I've always had this entrepreneurial itch. I was around startups, from an early age. Both my parents are lawyers, but along the way, my dad actually decided the law profession was not for him, and he actually joined a startup. So I kind of got to see the bumps and bruises that come along with the startup roller coaster. But I still wanted to participate in that, and so I started my own company. That was a rocky road too. I did that for the first 3 years after graduating.
What was that
Um,
company?
so that company is called Reward Tag, and the idea was to put a label on. This is in 2011. Put like a sticker or a keychain on things that matter to you, and the label had a serial number on it and the website rewardtag.com, and it said reward for return. And so the
Ah,
idea was you could connect your physical asset to a digital profile, and that would facilitate the return of that loved item. So back in
interesting.
the day when we all had digital cameras, that was a very common use case. People would put the sticker on a digital camera, and if they lost that, somebody would be able to return it to them, which they otherwise wouldn't really know how to give it back to the person who lost it. And
So this must be prior to GPS
yeah,
being really common, maybe? I don't know. I think we had it back then. So,
not so Tile came out along the way, probably about 2 years in. And the iPhone had some tracking, but like keychains didn't have it. Digital cameras, I don't know if I guess they probably do these days, but nobody buys digital cameras anyway.
mhm.
And ultimately, what ended up happening with it was we were able to sell it to one of our clients. So we made it a B2B company, and actually the insight that we had was companies like Logitech wanted their customers to register these reward tags, and in doing so, they would capture the customer data of the person who was providing the return information that would help them get their lost item back.
Hmm.
And so, a lot of brands are struggling to capture that data, and this was a way for them to do it. So this luggage company called STM Bags, who was another client of ours, ended up buying it from us, as I was starting to think about, this isn't going to be a home run, so I want to move on to my next thing. And so I sold it to that client and ended up working at Lyft starting in 2014, as the California market manager, which ended up being quite an interesting job. The pink mustache on the front of the car, really early
You,
days.
do you mind just before we talk about Lyft, which definitely want to talk about,
Yeah,
first exit, like you said, not a home run,
yeah,
and I don't know if you raised a lot of money, but
zero.
so exiting at that point, you must have been, pretty young too. Was that, you know, money to retire the rest of your life,
No,
or
not
buy
at
a
all.
house, or buy a car, or buy a baseball cap? What was that?
Yeah, 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 yeah. It was closer to baseball cap than retire for sure.
Okay.
Not a big outcome. More just I really wanted it to continue to exist for our clients, and I wanted to kind of return my, uh, you know, initial capital that we put in as founders. I had a couple co-founders too, so we were really just trying to recoup our own investments in ourselves, and really the value there was just learning how to build a business from just grinding it out and bootstrapping. We were able to, generate enough cash flow to keep the business growing and to pay ourselves a little bit, but we never raised money. It was not kind of the default option back in 2011. I'm sure if we were to start it today, the first thing we would have assumed we should do is go raise money, and that was just not the case. We were like, let's build a business where we have customers funding the growth of the business. That was how we thought about it.
Crazy.
Yeah.
Okay, so at conclusion of that, were you thinking new startup and Lyft just came along and seemed like, okay, I'll jump on board as a marketing manager? Like, what was the mindset at that time?
Yeah, yeah, good question. So my wife and I, my now wife, then girlfriend and I, we were both from the Bay and we were in LA at the time. So we decided, let's move back up to the Bay and kind of get our life. And that's where we still are. So this is in 2014. Let's kind of make that next step and be closer to our parents. And so I started to apply to real jobs. I had kind of spent 3 years just working for myself without any real I had great advisors and people in my corner, but I wanted to work at something that was working really well. So I got offers from Facebook, Twilio, and Lyft.
Wow.
And so I was deciding between.
Wait a sec, Ryan, why? Why are you so popular with such big companies?
Coming from the Bay Area, I have an amazing amount of privilege and a huge network, and my friends worked at those companies, and I was able to get in the front door at all of those, and they
Wow.
kind of served it up on a silver platter for me. So I don't take any of the credit.
Just to timestamp this, so it's 2014, was that
Yeah.
roughly it? So we've got Facebook. I'm trying to think. It would have been up and running and probably
Yeah.
beyond colleges by then, but certainly
Yeah.
not super large.
Yeah.
Twilio,
I think it had 10,000 employees at that point.
okay, so you're not one of the first 100, but you're one of the first 20,000. Twilio,
Yeah.
I can't even timestamp Twilio. I'm not sure their archive, but how big were they at the time?
Yeah, they were pretty small. I think maybe like 500.
Okay,
Yeah,
and
I
Lyft?
think Lyft was about, on the business side, it was about 50. On the overall full company, including customer support and it was like 250 to 300.
Okay,
But like in terms of the people I was really working closely with, it was like 50 people.
wow. And is that why you chose Lyft out of those three? Just the smaller company, getting in
That's right.
earlier, all the good
Going
reasons?
from like my own thing to joining Facebook. So when I got that Facebook offer, like they they said we're making you an offer. I told them that Lyft made me an offer and I was really excited about it. And they're like, okay, we're gonna make you an offer. We need to get approval from two different apartments, and then we'll let you know exactly what the offer details are. And I can't remember if I did it on that call. I don't think so, but it was right after where I was like, honestly, don't even worry about it. I can't work at a place like that. Like that's not. I just know I'm not going to be able to survive the bureaucracy. So I think they ended up giving me numbers. It was a way better offer than Lyft. It financially would have been a much better outcome than Lyft long term. But I'm so glad I did not take that offer because it was in my DNA to be at a smaller, faster growing, or maybe not faster growing, but like more exciting startup, and that was Lyft. And man, I learned a lot.
So what was your skill set at this time? You said you joined from marketing. What were you bringing in something from that company you started in terms of growth hacking?
No, no. So it was market manager. So they were looking for just kind of an entrepreneurial person to build the California markets. And so I was overseeing every California market, LA, San Francisco, San Diego, Orange County, not for marketing, but for just growing the business. So thinking about the supply side on the driver side, from operations to marketing to partnerships. For example, at the time, we had never done anything with Coachella. And I was like, you guys, there's like a huge music festival people need to get rides from. Like, what do we do for this? And they're like, we've never done anything for an event. And I was like, that seems like we need to change that. Thinking through what are all the events in California? So there was a lot, so all up and down the state. it was a crazy job for me to have, 4 years out of college, 50+% of all Lyft rides were in California markets. And
Wow.
looking back, I can't believe they gave me that job. And it was a really amazing learning experience. And eventually we ended up hiring general managers for all of the different markets that I was personally overseeing. So I helped hire the GM of LA, and I flew to LA and I trained him up on how to grow the LA market. And so we did that for all the different markets.
Okay, so I'm guessing you were early enough to get some employee shares, some
Yeah,
equity in the company then.
options. Yeah.
Yeah, options. Were you like, I don't know what the vesting schedule is. Were you seeing yourself staying at Lyft long enough? Were you playing it by ear? What was your sort of,
Yeah, that's a good question. I mean, it's four-year vesting cycle. I was still pretty early in my career, so it was not really going to be a life-changing, retirement level outcome regardless. So I wasn't really going to be golden handcuffed at that stage. I ended up staying for about 2.5 years. Lyft went from 200 plus people to 2,500 people in that 2.5 year period, which is just insane.
busy?
And I just kind of I lost the love for working at a place that size. So I knew I'm not that's not my vibe. I need to be smaller. So from that point on, I was always at smaller companies.
Okay, so you basically quit Lyft
Yeah.
to join another company, or
Yep. I quit.
okay,
So in 2017, I was fascinated. I still am fascinated with just moving people around. Like transportation gets me excited. So I joined a self-driving car company called Zoox, and Zoox was inspiring because it was started by kind of a family friend, co-founded by Jesse Levinson, who's one of the smartest people I've ever interacted with. And it was kind of a founder bet at first, where I was like, he's the smartest person that I know, and he's building something that I'm excited about. I don't really need to dig in much further, which actually maybe was a mistake on my part. I'm doing it. And so I joined Zoox, again, 200 people. It was about the size when I joined. And the idea was incredible. It is incredible. It's still going, which is build what comes after the car from the ground up. So what does come after the car? It doesn't have a steering wheel. It's bi-directional. It's self-driving, obviously. Um, and there's a lot of like things that kind of go along with that. So we were building the car. We were building the technology to power the car, the self-driving technology, and then building a platform like a Lyft Uber competitor to request rides from this. And so I helped with a lot of different things, a lot of different projects there, and ultimately it was acquired by Amazon during COVID, and so that was another really interesting path for me.
okay. So just when you say the what comes after the car, you mean Zeus is trying to stay ahead of the curve and plan for a world where you don't have a driver.
Yep,
And other than that, it's still very similar to Lyft and Uber, really, isn't it? Request a car. It's got no steering wheel because there's no driver. So you use
exactly.
the space in a different way.
Hmm.
I'm also guessing by then you've got partially vested Lyft shares. You probably took
Hmm.
Zeus
Yep.
shares as well. You got acquired by Amazon. So I'm only saying this because obviously everything connects to angel investing somehow. So
Yeah.
you're familiar with this idea of getting equity. What happened after Zeus? And I'm assuming again, when that acquisition came through, again, you were not receiving retirement money. And did you
No.
stay on with Zeus with Amazon or not? I'm assuming no, big company, you
Nope.
don't like it.
No, no, I didn't. So the thing that I missed in kind of thinking through whether or not I should join Zoox was I am a business person, and Zoox really was more of in the R&D engineering mode, building all this stuff. I think if I joined Zoox, 2 years from now or something like that, in 2025, and there's paying customers and they're growing in different markets, that's where I kind of
Right.
excel. And so,
Too
I
early.
think I was just too early. I got a little bored, I think, waiting. But I just loved like what the mission was and what we were building. So for me, though, the outcome not good. I actually lost money on my options from the Amazon sale.
Oh,
So
wow. Explain how that works. Why is that?
the getting acquired during the early period, or like I think June or so of COVID is not good for companies. It was more of a desperation sort of acquisition. And because fundraising for something with such a long time horizon that Zoox was on was required a lot of capital. And um, I wasn't there anymore at the time. I'd quit and gone on to the next company. But I learned that the only people who were going to retain their value and their equity were the people who were still at Zoox when the company was getting rolled into Amazon. And so I think it was a decent outcome for some people at Zoox who are probably still working at Amazon to make sure they're fully vesting. But for the rest of us who had already left, I bought my options and they went to zero. So
Oh, okay, okay. So you try to get all your options early by paying for them to
yeah,
vest. Okay,
yep,
makes sense. All
exactly.
right. So
Yeah,
obviously a learning experience coming out of that one, both
yeah.
around options and acquisitions, but even what you enjoy working on.
Hmm.
You're really packing in the transitions here too. What came next?
Yeah, yeah. Oh man, there's more. So I'll keep them tight. So what came next was I joined a 5-person startup called Blackbird, which was like Lyft for propeller planes. Again, moving people around,
Cool.
marketplace.
Yeah.
Um, and that was awesome. I was there for a year and a half. Really wild experience working, directly for the CEO as kind of his right hand man for a lot of the time, recruiting a lot of my friends from Lyft. We really found product market fit at the right price point. So the example here would be like flying from LA to San Diego. That's the type of flight we're talking about, not a private jet across the country. We're talking about propeller planes flying from LA to San Diego for like $150 a seat. And so you could fly over the traffic, get there really quickly, and really have like an incredible experience doing that.
Like a giant drone is the way to kind of think about it,
Yeah,
right? Yeah.
sure. Yeah, exactly. Like a Cessna, small propeller plane that you see up in the sky.
Mhm.
And and so this was not like a futuristic thing. This is like 1972
Oh,
Cessnas.
oh, we're
Yeah,
talking like
yeah.
real normal planes. We're not talking
Just
about any
plane.
tech around
Not
like,
yeah,
oh,
yeah.
okay, so not like a drone, really just a plane.
It's a small plane. Yeah,
Okay.
small old plane.
So why,
And
how does that compare to say like a NetJets or, the,
yeah, so
yeah,
NetJets is jets, right? Those are jets that are flying, the elite across the country, and it's going to cost, $5,000 an hour to fly private. We were going the opposite direction, which is pay for a seat on a propeller plane going from LA to San Diego, or those short little bunny hops for a price that most people could potentially afford, and really just go down market, whereas every other company in the private aviation space goes up market.
okay.
And
Was there
unfortunately,
was there a thesis there though to make it more affordable and like what was the plan? Because that just sounds like very low cost flights, not a lot of profit to be made there either.
yeah,
So yeah.
the thesis was and I think this is right, which is eventually electric aircraft are coming, and the price per hour to fly those things is going to be like sub $20 an hour. Um, there's some battery density hurdles that need to be overcome, but it's coming. It will happen. And so the idea was kind of like how Uber and Lyft are trying to build the network for autonomous cars, right? Like eventually the 10-year picture is like all these cars are going to be electric, autonomous. You don't have to have that many drivers. The margins go way up.
Right.
And so in the same way, if you have a plane that's electric and it's the margins go up, and if you own the demand side of that platform, then you're probably going to be in a good position. And so we proved out that the demand was there, and then it really became the challenge of like how do we stay alive between now and the time that the electric planes come.
Right. Which is a similar problem to the previous company as well with the building the cars for the future. So,
Exactly.
yeah,
Yeah.
okay. Um,
Yep.
take us forward then. Did you leave in a year and a half again or?
We all left in a year and a half.
Okay,
Yeah.
okay.
So the company kind of got fire sale acquired by Surf Air and rolled into that business. So that was, not, we'll see. Actually, Surf Air is actually about to go public pretty soon.
Oh,
So maybe that will amount to something.
yeah, you have
But
shares in that one?
I do. I have a lot of
Okay.
shares in that one. So
Okay.
fingers crossed that that goes well. But yeah, the problem there was our unique approach ended up kind of being uh, let's call it shut down by the FAA, which
Oh,
they basically told pilots who were considering flying for Blackbird that they could lose their license if they did, because we had found this loophole and they didn't like it, and so they
okay.
couldn't figure out a way to just shut us down. So they basically told pilots, our supply side, that they would lose their license, and
Okay.
that
Okay.
worked for them.
All right. So you got acquired and then rolled into another company.
Yep.
And you quit at the same time again, or?
Well, no, that was just a lay.
Oh,
Everyone just
you're
basically got
gone.
laid
Okay.
off.
All right.
Yeah, they kept a skeleton crew to roll into Surf Air. So you're
Okay.
still
So
wondering, where is this guy going to make
yeah.
any angel investing money? Yeah,
Yeah. Our topic is angel investing today, but wow, you've had a bit of a career here. So what came next?
yeah. So a lot, like at the very end of Blackbird, I also started to realize, man, I'm working super hard. I have a decent amount of shares in this company, but sure would be nice to be on the other side of the table and be on the investor side. They're getting preferred shares, not common stock. It's they can diversify versus just be at one company where you're really not diversifying. It's a high risk asset class, so why would I want to only have diversification into one company versus many companies? This is kind of a raw deal, actually, is what I started to realize. And I was like, I'm in Silicon Valley. I'm really well connected. Why don't I learn about getting on the other side of the table? So, and maybe I should just try to get a job in VC. So I just networked super hard, connected to everyone I know from high school who's connected to VCs or working in VC, and I just probably did hundreds of meetings. And I started to find, number one, that I was not hireable as a VC.
Okay.
And they wanted to see a track record. They wanted to see deal flow. They didn't just buy my story. They're like, I'll figure it out. Trust me. Like I'm gonna find great deals and bring them to you. And they're like, yeah, sure. Everyone says that. So the advice I kept getting was, why don't you start a syndicate of Lyft alumni to invest alongside you in the supposed deal flow that you're going to be able to find? And I said, okay, that's what I'll do. So in 2019, I started the Lyft Syndicate, which was both Lyft alumni and existing Lyft employees who joined for free a syndicate on AngelList, which is a platform that makes this all easy. And basically, I said, look, just I'm going to write up memos about companies that I find where the founder gives me an allocation in their company's fundraise to invest in their company, and I'll share with you that opportunity and who else is investing and how much they're investing, and why I think this is a good deal. And so I started doing that. I started getting plugged in with really high caliber people on all sides of the ecosystem, including Anne Miraco, the first venture investor in Lyft, board member at Lyft,
Wow.
and founder of Floodgate Capital, which is one of, if not the best seed stage fund in the Valley. And so I got super lucky, and she took me under her wing for years still. And so this is, now we're talking 4 years later. Anne and I had weekly calls for the first like 3 years, and we now do it monthly. And I just started bringing her deals, and we started talking through them, and then when she said, hey, this is a pretty good one, sometimes her fund would invest, and sometimes, and every time she said that, I was bringing it to the Lyft Syndicate, and so
Okay.
the people could invest.
Now that leads me to a question. So deal flow.
Mhm.
Um, I can imagine a proximity for you being in the Valley, B, having worked for so many different startups, including one that was super successful at the end of the day, Lyft.
Yep.
Um, you're connected to a lot of people. How does one go about, though? Because you said you were not a VC, you had no track record. So
Yeah.
you're starting a syndicate. They expect you to start presenting deals and
Mhm.
good ones too. So
Yeah.
how do you begin this process? Are you just making phone calls saying, let's meet for coffee? Are you working on something? Are you thinking about working on something? How does it
Yeah.
happen?
It's a good question. So number one, I think the currency in angel investing and in venture in general is sharing deals. If you share good deals with people, they'll share good deals with you, or hopefully they do. And if they don't, and you keep sending them great deals that they invest in, that's a problem, and you should kind of figure that out. But most people kind of play by the same rules, which is if you're bringing me good deals, I'll bring you my good deals. And so I just started getting plugged in with, ex Lyft people who were starting their own companies. And I made it clear to everyone who would listen. I DM'd hundreds of people on LinkedIn. I'm starting the syndicate. If you start a company, let me know. If you want to join the syndicate and invest in these companies, you can invest $1,000 if you want. Here's the link, join. Posting on LinkedIn about it, just making sure that my network knew that this was something I was working on. And then they started to come to me with, hey, I am fundraising, who should I be talking to? And then I would connect them with this network of VCs who all rejected me when I was trying to get a job. That actually paid a lot of dividends because I became a kind of a super connector amongst the founder world and then the VC world. And I was just kind of connecting the dots. Here's a founder who's fundraising. Here's a investor who I met who is interested in that space, and just the engine starts to turn. It doesn't take that many deals to share to start to build that pipeline.
Right, right. And I guess word on the street, people start knowing that
Yeah.
yeah, you have access to capital and vice versa. One question though, I'm sure the listeners are thinking, but how do you earn money when you're leading a syndicate and you're basically investing other people's money to start with, maybe a little
Mm-hmm.
bit of your own savings because it's
Right.
common for the lead of a syndicate to
Yep.
also put in money. But I can't imagine we're talking millions of dollars you had available of your own money to pour
Yeah.
into these companies. So how do you feed yourself, Brian, during these early days as a syndicate lead? You know?
Wow. It's so you kind of threw me a softball there because a couple of my syndicate friends and I, this is, back in 2019, so there weren't that many of us doing this. We called it the Syndicate Diet. So how do you feed yourself? We were on the Syndicate Diet where you really most venture funds, the way it works is they get management fees. That's how they pay the bills, right? So for me, I ended up joining after Blackbird. I joined a company called OnDeck. I was like employee 3 or 4 at OnDeck, which is communities for at the time it was just for founders to connect with each other and start companies together. And I joined it. They hired me because I was doing this Lyft syndicate thing, and people were really excited about it. And I was kind of proving myself as a strong networker. Um, but I needed a salary. I still needed a salary to do this, and so that was how I was generating my salary, uh, both to try to I guess I was starting a family, so to have the family side covered, and then also I needed funds to invest in these companies because I made some money from Lyft. It was not a crazy amount of money, and so I was personally investing like $2,000 into all of the deals that I was syndicating out, and then we would invest as a group like 300 more 400K into many of these companies just from pooling together everyone else's capital. And so that was my strategy. It was like I don't have that much money to spray too many checks into companies, but I can pool together capital, and people can make their own decision and participate with me if they want.
So for those listening into this, what is the theory as a syndicate lead? I understand now it's almost like a side hustle while you're working
Yeah,
at On Deck as
it
an
was. It was
early
this.
starter. Right. So the pieces come together. You're early in Lyft, other companies, founders. You have a pool of people who've probably had exits of some sort,
Yeah.
whether it's as a founder or an early company employee. So they have money to put into angel investing. You're the one who's sourcing deals. You also know other syndicate owners and VCs, so you're trading deals back and forth.
Yep.
So the wheel starts to spin. But at the end of the day, there's no management fees for a syndicate lead. There's I believe, 20% carry when there's an exit. So you don't
Yeah.
really get paid, possibly for 7 years at best, maybe
Yep.
a little earlier than that. Um, what like I don't know what year are we even in with you as a syndicate lead right now? Have we had an exit yet? Is there are we too
Year
early
four,
or
yeah, too early. Year
okay,
four. I think there have been exits, but you're not gonna if a company exits, you know, 1 to 4 years into the life cycle, you're not gonna most likely you're not gonna make much money from that. So there have
right?
been a few, nothing, nothing meaningful.
Okay,
We gotta. I'm really hoping there aren't any for a couple more
right,
years.
right, right,
I want them all to stay private and keep going. And there are a couple. There's a number of companies that are showing signs that they could be huge outcomes, and that's the game that we're playing. So, many of them will fail and all the way down to zero. But if you spread your bets across enough high quality companies, you're most likely going to hit at least a few.
yeah. Let's talk about that. So what does it look like to be like on the right path? Like you said, there's a few that are looking like they could work
Hmm.
out. What does that look like in terms of, is it just revenue, like the ARR? What is it?
Yeah. Yeah. I mean, that's probably like the punchline is ARR as what it comes down to. So how's that graph looking? Is it going up and to the right? That's number one. There are other companies that aren't there yet from an ARR perspective, but they're building kind of a longer term big network, and those are going to take a lot longer to get there. So there's one of these companies that their user growth it has just been off the charts from the beginning. They've gotten a ton of funding from top institutional VCs. Their ARR is probably, single digits still, but they are likely to be able to layer it in. And so that graph looks a lot different. And we'll see how the market kind of treats that, right? Like they were able to raise a ton in 2021. They took it. They have runway for like 3 years, and they have time to grow into it, and hopefully, be in a really good position to fundraise as these cycles come and go.
Is that
So
because they're in a technology that takes time to develop? Like it sounds like your startup career, you kept jumping into things that were not going to be ready for a
mhm.
while yet. Is that
Yeah.
what you're kind of doing with your investing as well in some cases, or?
Um, yeah, good question. Now this one, I don't do a ton of like deep tech, and I certainly have learned my lesson on like capital intensive businesses. I really focus on software, high margin, fast growth businesses. This one company I'm referring to is building more of like a network that would compete with LinkedIn. And so to get to the monetization side takes a while.
Right.
So it's more of that kind of maturity versus like requiring more and more capital to build the thing that people are going to pay for
Okay.
eventually.
So going back to the ARR though, let's
Hmm.
step away from the ones that are trying to build something before ARR. Let's talk about
Yeah.
the ones who actually do monetize early. You're in year
Hmm.
four. What are you hoping their ARR actually is in year four to be considered like a likely, the lead runner in your overall? And how many investments have you done so far?
Oh man. I think so there's a couple of different ways to answer that question, and we'll have to kind of dive into it, but it's over 100. Um,
Wow, in 4 years, over 100 in your syndicate. That's great.
yeah, yeah, yeah. So we'll touch on this, but there's the Lyft Syndicate, there's Hustle Funds, Angel Squad, and then some direct personal investments. So there's a few uh, components to how we got to over 100 in 4 years, but that's where we're at.
Okay, and the numbers. So at 4 years, what does the
Yeah, yeah.
winners look
So
like?
I think the most exciting one is I think probably 3 years in. They have contracted over 150 million in ARR,
Whoa,
um, which is incredible.
that's
They
huge.
haven't there's kind of some trigger points to start capturing that ARR, so it's not at that number yet, but there's a high likelihood that they'll get somewhere close to that over the coming, let's call it year or two, to actually fulfill the contract. So that could be the home run. And we were the first investor into that company too.
Okay, nice. So let's talk ballpark numbers though. Would you expect in year four, if things are going well, I don't know, what would be the ARR? Maybe 6 million ARR, 10 million
Yeah.
ARR. I don't know. I'm actually thinking my own investments. I've been doing it for a little bit longer, not much. Like I'm in my fifth year, sixth year for maybe the first one I ever did. And like the best ones are almost 30 million ARR, but some of them are marketplace models, so their take rate is
Mm,
less. And
yeah.
usually the ones that are like SaaS are more like 10 million ARR type situations. So those are the ones I consider my winners. Obviously, the majority are not at that level. And the other ones you're like,
Yeah.
you're probably going to die or exit with a single or double or something like that. But is
Yep.
that kind of what you think as well? Or because I know you were in Lyft, and when you look at a company like that, I'm sure the ARR in year four is like, uh, you still hear me?
It got choppy there for a
Okay.
second. Yeah.
The recording will be fine, so we'll
Yeah.
keep going. So
Yeah.
yeah, with a company like Lyft, like a proper, that's like a decacorn type,
Yeah.
real unusual, not just a unicorn, but a really unique situation. And that's probably year four. They're already, I don't know what their AR would have been. Could have been
I don't
crazy,
either.
almost a billion. I don't know. So
Yeah, I don't know. I don't know. I think GMV was around a billion. The run rate GMV was a billion at like in 2015, I think. So I think that was probably 5 years in, 20% take rate on that. So I think it was doing like 200 million, maybe 5 years in. And that's
right.
not ARR, right? It's because that's just transactions. But they were doing run rate, let's call it of like 200 million
Which
is
is
my
an
guess. That's all
outlier.
public information.
Yeah, yeah.
So something like that. So, that gives you a benchmark for like one of those rocket ships. But yeah, I think the numbers you shared are I would say in line with what I see as like, really exciting, promising companies.
Okay. So let's break down, like you mentioned, you've got your Lyft syndicate. I love calling that like the Lyft mafia, right? 'Cause that's basically what you created there, a place for the Lyft mafia to keep investing. Now you've got the Hustle Fund, and obviously I know you as now a squad member, but I also had Elizabeth Yin on the show. You can go back and find her
Yeah.
episode as well. I think Elizabeth is certainly getting her name out there. She's becoming more and more well known as well as a VC, which is great.
Hmm.
Can you connect the dots? How did you get involved with Hustle Fund? Because I think we've covered
Yeah.
your Lyft syndicate. You started that first.
Yep.
I would have thought maybe that's all you do. You just keep doing that, but you've branched into other things. And
Yeah.
obviously you have on deck as well. Like, are you still working there, or did you left?
No, no. Yeah, so the story there, let's see. So I was at OnDeck. This is again 2020, dark COVID times. And and I had this idea at OnDeck. I was like, why don't we we have OnDeck for founders, why don't we make OnDeck for angel investors? And they loved that idea. They're like, yep, let's do it. You're in charge, go build it. So I built OnDeck Angels. We ran that for a couple cohorts. And really that idea was, let's see how many really well connected, experienced angel investors who maybe already have a fund that they're raising or are managing. There's this really exciting trend, especially at that time, of people who are going from angel to fund manager, raising $5 to $10 million funds. Like, let's try to attract that demographic. And so we did that. It was pretty successful. A lot of interest in joining that program. But
Just so,
for
I actually know nothing about OnDeck. What is their monetization model?
it was a membership fee to
Okay.
do it. I think OnDeck was charging $5,000 to be a member of OnDeck Angels
Okay.
for like a 6 week program, and I was like, that is cool, and there's a lot of interest. And OnDeck at that time was one of the most like fastest growing, very hypey companies. It was really like every metric was going up and to the right. But I met with Eric and Elizabeth, and I was like, OnDeck is going this direction. I actually really want to go this other direction, which is this insight I have from running the Lyft Syndicate, which is open to anyone to join. And I'm seeing people from all over the world who have no angel investing experience. They really don't know where to start. And they're joining my syndicate just to invest alongside me. Why are they investing alongside me? I'm still very much new to this. I don't really know what I'm doing outside of what I'm learning from Anne Miraco, who's keeping the train on the tracks. Why don't why isn't there a program that's teaching people how to do this? And would you guys, if I like left On Deck and started it, because I know On Deck doesn't want to do this, why don't we create this together? And or why don't you speak at it? And they were like, wait a second, we have this idea too. We have this exact same idea. They sent me a Google Doc. It was like, here
Well,
is what we have in mind for an angel club, they called it. And I was like, I think we're on the same page. They're like, quit On Deck and let's do it. And I was like, let me tell my wife that this is the plan. We just had a kid in July. This is October, our second child. As you can see, my career has been very zigzaggy.
yep.
She's gone through a lot of kind of abrupt changes, and eventually, what I told them was like, why don't you guys announce to your friends that you're going to start this? And if you get 100 applications from your friends, I'll quit On Deck and we can do this. And uh, that's what they did. So Elizabeth, Sheehan, and Eric just like messaged their friends, posted on Facebook. They didn't make it public. It was just like to their friends. And they had enough interest. And I was like, okay, I guess we're doing it. So I quit On Deck. I started Hustle Fund's Angel Squad. And what we really have nailed is we built a program where we're teaching people how Hustle Fund makes investment decisions. We are giving access to invest alongside Hustle Fund in our best portfolio companies. We're building a really special community of the people who are interested in this and connecting them to each other. And then we're helping those people who want to get involved with the startups that we're investing in get plugged in and raise their hand if they want to help those startups. So we launched it in January of 2021. And since then, it's just taken off. We have over 1,500 people have joined. And we honestly couldn't be happier with how it's been going.
Yeah, and I when I went through the initial call for Angels Squad, I was actually mostly impressed by the deal flow, as in the I don't want to call it a salesperson, the current
Yeah.
Angel Squad
The
member who was telling
recruiter.
me, yeah, the
Yeah.
recruiter, I don't know, the person telling me about Angel Squad was,
Hmm.
I was asking, is it like one deal a week? Is it one deal a month? And she's like, no, sometimes it's like multiple deals a week. I'm like, okay, that's amazing. So you
Oh
get in
yeah.
front of a lot of companies, and I'm like you in the sense that angel investing has been a side hustle. In fact, I'm probably even more side hustle than you. Now you're a syndicate lead. I'm not a syndicate lead, and I've primarily invested through syndicates,
Mm-hmm.
and I really enjoy the learning you get from just being behind the scenes. And really, it's just the updates from the
Yeah.
founders. They send the updates to the people who are back
Yeah.
them, and you learn just everything. Like as a founder myself, you're learning, okay, what are their metrics? What are they doing with their marketing? What are they doing with their
Mm.
hiring, and how they're spending money, and where they're struggling, where they're growing. So it just
Yep.
gives you this sense of, okay, we're all doing very similar things, and gives you and as an angel investor, it helps you understand what metrics to look for, and so on. So um, maybe in the last sort of 5 minutes here, because I know we're going to wrap this up soon, what does it take, Brian? Because now you're leading
Hmm.
essentially a bunch of angels who are all investing. You've had a bit more experience now. The ultimate question: what do you look for in
Mm.
an angel investment, especially when, like me, I'm part of your syndicate with Angel Squad. I'm part of Jason Calcanis's
Yep.
syndicate. I've been in Arlen Hamilton's syndicate. I'm
Yeah.
part of syndicates on Angel List. There's way
Yeah.
more deal flow now than I could possibly invest in. I'm
Yeah.
not rich enough, and I have noticed, like, throwing $1,000 into each deal, while it's nice to participate, I crunch the numbers and I go, I'm not going to get a good return on 1,000 unless it
Yeah.
really is Google or something like that.
Yeah.
I like to calculate based on, what if this turns into a $1 billion company, and like
Yep.
a classic unicorn calculation. So it's really more like 5,000, 10,000, 25,000 to sort of get started, which is a lot of money. So I'm picking and choosing only a few
Yeah.
companies, doubling down on the winners.
Yeah.
And picking and choosing a few is actually very difficult. So what is the criteria you recommend to look for when picking and choosing the few to invest in?
Yeah. Great question. And it is hard. And I think I have a few thoughts on that. Number one, part of why we started Angel Squad. So we didn't talk too much about Hustle Fund yet, but Hustle Fund's an early stage venture capital fund based in Silicon Valley. Elizabeth Yin and Eric Bond and she and Co are the three GPs. They're friends from Stanford. They've all been in startups their whole career. Eric and Elizabeth worked together at 500 startups back in the glory days, and broke off to start Hustle Fund. Uh, these are really good investors. And number one, I think learning from people like Elizabeth and Eric and Sheehan on what their frameworks are, respectively, is a really helpful starting point, which is why we started Angel Squad. And then having the deal flow that you receive filtered down by somebody like those people, whether it's Jason Calacanis or the Hustle Fund team. And so you're only seeing the deals where they are putting a meaningful amount of capital to have some real skin in the game, as a kind of a filtering mechanism, is a really good way to save your time, right? You can join 100 different syndicates on AngelList, and most of the people are kind of like how I was when I first started. It's their filter. Like, do you want their filter, or do you want a more experienced filter? So I think the filter matters. But then your question is more about what's my framework. And so my framework's different from Elizabeth's framework versus Eric's. We all have kind of different inputs that matter more to us or less to us. But I think there's a kind of an agreed upon set of inputs that you are looking at when you are making an investment decision in a startup. The obvious one, the founder. Who are they? Why are they the right person to start this company? What kind of private information or earned secret, as Anne Miraco liked to put it, have they gathered from some sort of experience that they have that makes them the right person to build this thing, this insight? So there's kind of a whole laundry list of different components to think through. You could also think about if they have a co-founder, how long have they known the co-founder? Have they built anything else before? Did they just meet on the street? What's their relationship? Are they childhood friends? So there's a lot of elements to think through when it comes to the founder. I think for me, for Eric, we think of that as kind of number one. Then there's the market. The market, is this something that the market needs? How big is the market? What is this, a painkiller or a vitamin? A vitamin is kind of more nice to have versus painkiller, like you really need this product. So there's thinking through the kind of the size of the market. Then there's what is the solution or the product that's being built, and does the customer show any interest in it? What we call this market pull at Hustle Fund. Is there market pull? Are customers saying more and more that this is something that they need, and you could usually see this in a graph of some kind that's either user growth or revenue, just showing that in a short period of time since launching your product, there's more and more people who are using it. And then what does the retention look like over, certain periods of time and cohorted out as you release new product features? What does the retention look like, and is it going up? So there's some benchmarks to look at from like a metrics perspective. So those are just some of the things. Those are the obvious things. There's also things like competition that you probably want to think through. At the end of the day, though, we often think, we're not super worried about what if Google does this. That's not a reason for us at this point not to invest. Maybe there's in the AI space, that's maybe a different game that people are playing, but overall, competition is something to think about, but also something that we don't overweight. However, there is a factor within competition that we do value a lot, which is if this is a super competitive space, what is customer acquisition going to look like long term? If it's super competitive, the customer acquisition costs are going to go up over time. And so as a result, do you have enough margin to play with for that product to make that sustainable? And oftentimes, if this is a super crowded space, we'll bow out of that because of that customer acquisition issue. But we're less worried about the incumbent issue of, what if the big guys try to copy this? So those are some of the thoughts. We have a pretty robust framework that we share at Angel Squad, and anyway, hopefully that's a helpful starting point.
Yeah, no, that's interesting, especially your point about the competition and the potential future cost of acquisition. You don't necessarily think about that, especially because so many companies are using Google and Facebook as their main, their paid advertising source, and we're all going for the same eyeballs essentially. So,
Yep.
yeah.
Exactly.
Um, Brian, so interesting. Your career is interesting. I love that you've switched to angel investing without, being rich at the end of the day. So many
Oh
people
yeah.
talk about I had a big exit and then I became an angel investor. Well, that's nice for
That's
you, but you you demonstrate the potential that you can enter angel investing without having had a life-changing retirement forever exit. And hopefully through your angel investing, that will be the outcome anyway. And you're associated with Hustle Fund, which already Hustle Fund. What's I know is it the web building tool? Is that's their biggest
Webflow.
Webflow? Is that probably their biggest hit so far? Safe to say,
Yeah.
or
Nerd Wallet and Webflow so far are the biggest hits. Yeah.
okay, because they've
Yep.
been in their past 7 years now, so they're starting to get
Yeah.
their big ones. Okay, that's awesome.
Yep.
Anything you want to throw at the users before we wrap it up? At the
Yes.
users, at the listeners.
The listeners. Yeah. Let
I'm
me
in software mode.
I want to make sure I get this URL right.
Yes,
Sorry.
please do. Obviously,
Um,
I mean, I have to mention, I just joined Angel Squad, which what is Brian is the head honcho there. Um, and if you're an angel investor, obviously, or want to become one, because it's not just deal flow, it's education. And it's also networking. Those are the three reasons I joined. A, deal flow, probably my primary reason, and then B, probably networking to meet other angel investors, and then C, I'm not great with some things like some of the number crunching, or, like dilution, pro rata, some of these things that go along with these investments. So I'm getting better at it, but to have some structured training is another thing I like. So I'm looking forward to diving into what's available in Angel Squad, which I think I've said enough to give you a chance to find the URL there. Brian, how you going?
yeah. Hold on one second. I should have had this written down.
No, that's all right. I'm assuming it's Hustle Fund something Angel Squad, right? So
Yeah. So there's this. Okay. So we put together an angel investing starter kit that we want to share with folks to just get more insight into all of the components that come with angel investing. This is free for everyone. The URL is let's go hustlefund.vc/starter kit, and I can send this URL so we could add it to the show notes.
please
But
do, because that's a messy one.
it's a long one. Yeah,
Yeah,
it's too long.
yeah.
But we really hope people take advantage of it because we always wanted something like this when we were getting started, and so we put it together just a couple weeks ago to help people.
Awesome. And anything else you want to, any other links for you, Brian, or just that's the great best starting point?
I think that's a great starting point. The last thing, I've been getting more active on LinkedIn. So if you search for Brian Nichols, you'll find me. And I would love to engage on LinkedIn with you.
Okay, great. Well, lovely to put a face to the emails I've started to get, Brian. So that's great.
Yeah.
Nice to meet you. And I hope in 7 years we're talking about an investment that we both did and we're in and we're getting a lovely exit. So
Yes, me too. That is the goal. So hopefully we deliver. And thank you so much for joining Angel Squad. I appreciate you doing that. And if you have feedback along the way, I'm all ears. We have built Angel Squad based on all of the customer feedback that we've gotten along the way. I actually just looked. I've done over 1,000 interviews. So you were talking about the salesperson. I still do. I have probably 5 interviews tomorrow where I'm just
oh wow.
meeting with people interested in Angel Squad, and so I've learned a lot about what the people want, and I'm always interested in hearing how we can make our product a little bit better.
Yeah, I feel like it's early days still too. So even though
Yep.
you're a few years into it, but I have to say one of the other factors that swayed me is just simply Elizabeth and your GPs.
Yep.
It's a nice vibe. I love how early you guys are too. That's what I also
Yeah.
like about Jason. When you're getting in at a $5 million valuation, $8 million valuation, $10
Yep.
million valuation in a startup. True, it's seed, so you don't know if it's actually got any
Yeah.
traction whatsoever. But
Hmm.
it's just the numbers I do crunch is, well, if I got in at 20 million, it's actually a lot different than if I got in at 6 or 5.
Totally.
It's difference sometimes of hundreds of thousands to even millions of dollars. So it's
Yep.
crazy. Yeah, it's
Yep.
power law.
Power law. You're right. No, I was thinking about this exact same thing literally today. So we're definitely on the same page.
Awesome. Well, I will see you in Angel Squad, and thanks
Yeah. Thank
for
you.
sharing
Thanks
the
for
story,
having me.
Brian.